Hi everyone. Today we are going to discuss Q3 performance of Bandhan Bank. Superior return ratios, strong capitalization, improving funding profile, and highly experienced management and promoter profile makes Bandhan Bank an outlier in the segment. So let's look at its Q3 performance. The bank reported yet another quarter of strong performance. However, net profit growth was subdued at 10% as bank provided rupees 385 crores towards ILNFS exposure. Otherwise, the performance was quite strong across all operating parameters. So let's look at the key positives from Q3 numbers. Bank reported a robust loan book growth. Its advances book grew at an accelerated pace of almost 46% YOY. Within a short span of 3 years after getting banking license, Bandhan has built a formidable deposit franchise. It reported a strong growth in CASA deposits which grew by 71% YOY, outpacing the total deposit growth for the bank which was at 37% YOY. As a result, CASA deposits improved to almost 41%, which is an 8% improvement as compared to the same period last year. Due to the high-yielding portfolio and low cost of funds, Bandhan enjoys best-in-class margins. Net interest margins were almost stable during the quarter at 10.5%, and which is a very good thing. Bandhan also has a very strong other income growth, which came in at almost 48% YOY, and which was underpinned by the growth in fees from selling priority sector lending certificate. Now, this is a potent source of fee income for bank, as 96% of its portfolio qualifies as priority sector lending. So what are the key negative readings for Bandhan from Q3 numbers? Bandhan predominantly continues to be a microfinance lender as 87% of its book still comprises of micro-banking assets, which makes its asset quality highly vulnerable. Having said that, the merger with Group Finance will reduce the concentration of microloans from around 87% to 58%. The recent acquisition of Group Finance was a very expensive one, which will result in the book value dilution for Bandhan. Also, it will suppress its return on assets, while return on equity is expected to inch up slightly. So, what's the outlook on the stock? The stock corrected after the news of merger with Group Finance. Despite the sell-off and even after the correction, Bandhan still trades at a premium valuation of almost 5.5 times FY20 book value. With the significant progress which is made on the front of promoter stake reduction, and also because of the provision of ILNFS exposure, the key overhang on the stock is now behind us. We think that the premium valuation will be sustained given the high return profile, and also because there are levers for further improvement. So the long-term investors who are looking to buy a quality franchise operating at the bottom of the pyramid should look to buy into the stock if it corrects further. Thanks.